Hello, this is Dr. Nunez. Welcome to the Chapter 18 lecture. Chapter 18 is on activity-based costing, ABC, better known as ABC. Let's get started. So our focus in this chapter is on allocation of factory overhead costs. So in Chapter 16, the job costing chapter, we allocated the factory overhead to our cost objects because we can't trace overhead, right? We can trace the direct materials, we can trace the direct labor. So, chapter 16, this is a link here to chapter 16. We used what's called the single plant-wide overhead rate. We allocated that factory overhead using one rate, right? One predetermined factory overhead rate. And to determine the product cost, we trace the direct materials, we trace the direct labor, and we allocated that factory overhead. Allocated factory overhead using a single plant-wide rate. That was chapter 16. Now, in chapter 18, we have options, right? Because sometimes when we use a single plant-wide overhead rate, it's not necessarily as accurate as we would like it to be. And so we have other options that allow us to improve our accuracy or our precision. For example, we could use multiple overhead rates, or we could use what's called activity rates, activity-based rates. So we could use a multiple departmental rate approach, which means we might have a rate for each department, or we could just use activity rates, which means we have several activities and we have a rate for each activity. We're going to start this chapter by looking again. We're going to go back and look at that single plant-wide overhead rate as a refresher. And then we're going to go to the next step, which is to use multiple departmental rates. And then we'll look at activity-based costing. But the objective of all three of these is the same. We've got these factory overhead costs. And these factory overhead costs need to be allocated. We need a method for allocating the factory overhead costs. We could either use a single plant-wide rate, we could use multiple departmental rates, or we could use activity-based rates. But the ultimate objective is the same. We need a product cost, which has to include the direct materials, the direct labor, and the factory overhead. Again, we can trace the direct materials, we can trace the direct labor, but we cannot trace factory overhead. So we need to be able to allocate that factory overhead. So that single plant-wide overhead rate, when we use that, we introduced it and used it in chapter 16, that all we did was we found one rate that was based on the estimated factory overhead and an appropriate allocation base, an estimated allocation base. Again, the common allocation bases that we talked about in chapter 16 are the same kinds of bases that we talk about in chapter 18, direct labor hours, direct labor dollars, or machine hours. There are some advantages to going with a single plant-wide overhead rate. It's easy, it's simple and it's inexpensive to use. But a single plant-wide rate does have one simplifying assumption. The simplifying assumption is that all of the cost objects are consuming overhead in the same way. And that's not necessarily a realistic assumption, which leads to imprecision. So again, when we use that single plant-wide overhead rate that we introduced in chapter 16, we take the total estimated overhead, right? In this case, the example that we're going to be looking at in this chapter, that single plant-wide overhead rate is based on budgeted or estimated factory overhead of $1.6 million. And we're using a common allocation base, direct labor hours. We've estimated at 20,000 hours. So that's how we're going to get that overhead rate. And we've budgeted this overhead based on two products, snowmobiles and riding mowers. And we've estimated the hours based again on those two products, 20,000 hours for those two products at a cost of $1.6 million in factory overhead. So the way we get our rate, again, this is what we did in chapter 16. We'll continue to do it here when we need a single plant-wide overhead rate. We take the total overhead, right? Take the dollars that we estimate for that total factory overhead divided by some appropriate allocation base, like direct labor hours in this case, right? Take the $1.6 million divided by direct labor hours, and every time we assign overhead, it's going to be based on that $80 per direct labor hour. Trace a direct labor hour to the cost object, assign $80 of factory overhead to that cost object. Doesn't matter what the cost object is, whether it's a job or a product or something else. Every time we can trace a direct labor hour to the cost object, we're going to assign $80 of factory overhead. So in this case, we've got this one rate, $80 per hour for the $1.6 million of overhead, and we've got two products. These two products are going to be allocated overhead based only on that $80 an hour. So we can trace 10 hours to this product and 10 hours to this product. 80 times the 10 hours means we need to assign $800 of overhead. 80 times 10 hours traced to this product means we need to assign $800 of overhead. And that's the allocation. That's what we did in chapter 16, but we assigned to jobs. So the cost object was defined as a job in chapter 16. In this chapter, it doesn't matter how you define the cost object. The point is that you assign overhead to the cost object based on either a single plant-wide overhead rate, like in this example, or based on departmental rates, multiple department rates, or based on activity-based rates. So this is an example using a single plant-wide overhead rate, $80 per direct labor hour, assigning the overhead to two cost objects, two individual products. Now, we've decided that we want an option in this example, an option in addition to the single plant-wide overhead rate, and that option is multiple production department rates. So we don't just want a single rate, we want to be able to use one rate for each production department. So this plant has two departments operating. They've got a fabrication department and they've got an assembly department. And each one of those departments has overhead. Fabrication has $1 million of overhead. Assembly has $600,000 of overhead. So that's where that $1.6 million comes from that we use in the single plant-wide rate. $1.6 million of overhead for both of these departments. And what we want to do is allocate the overhead separately for each department. So instead of doing this, right, taking this chapter 16 approach, instead of using a single plant-wide rate to assign all this overhead, instead, now in chapter 18, one of the options that we have is what we call, again, these multiple production department rates. And one rate for fabrication to assign the overhead to the cost object, one rate for assembly to assign the overhead to the cost object. But the approach is the same. The way we get the rates, the way we assign the overhead, it's going to be the same. For each production department, we're going to do the same thing. We're going to take the overhead for the department divided by an appropriate allocation base for the department, and we'll get a rate. So down here, we've got department number 1, that fabrication department. It's got $1 million of overhead, and the appropriate allocation base for fabrication is 8,000 direct labor hours. That gives us a rate for department number 1 of $125 per direct labor hour. But for the assembly department, for department number 2, the overhead is only $600,000, and we have 12,000 direct labor hours. That means for department 2, assembly, we're going to assign the overhead based on $50 per direct labor hour for that department. So now when we assign overhead, we're going to do it twice. We have the two products, the snowmobile and the riding mower product, and we have to assign overhead from fabrication to each product and from assembly to each product. We assign overhead twice because we've got two departments, two rates. So when we assign that overhead, we've got to assign it twice instead of one time, which is what we did in chapter 16 in job costing. So now let's do that, right? So now we've got snowmobiles, right? That's the first product. And snowmobiles go through the fabrication department and they use 7 hours. The rate for fabrication overhead is $125. So we got $875 of overhead from fabrication to snowmobiles. And then the snowmobile product also goes to the assembly department. And it uses 3 hours in the assembly department. And the overhead rate is $50 per hour. So the snowmobile product gets $150 of overhead from the assembly department, or altogether, that product gets $1,025 of overhead. One product, two overhead rates, total overhead of $1,025. Same thing for the riding mower product. Riding mower product goes to the fabrication department. It only uses 1 hour. It's a $125 rate for each direct labor hour. That's $125 of overhead from fabrication to the riding mower product. Next, we have the assembly department. The riding mower goes through the assembly department, takes 9 hours in assembly at $50 an hour. That's $450 of overhead. Altogether, that's $575 of overhead for the riding mower product. So now we've allocated overhead to the two products. Each product gets allocated overhead twice, once from fabrication and once from assembly. What we need is the total overhead. That's what matters. Total overhead that's being allocated to each one of these products. Now, remember, we can still trace the direct materials to the snowmobile product and the riding mower product. We can still trace direct labor to the snowmobile product and the riding mower product. And now we've allocated the overhead to each of those products. And a comparison. So you can see there is a difference. When we assigned overhead using the single plant-wide rate, we assigned $800 to each of these products. When we switch to multiple production department method, well, we assign $1,025 of overhead to the snowmobile product and $575 of overhead to the riding mower product. So you can see we got a difference of $225 in the overhead that's being allocated. So imagine if you've got multiple products, thousands of units, you could see a significant difference in the allocation of the overhead. So essentially what's happening here is, again, the single plant-wide rate is kind of an averaging technique. We're averaging and coming up with one rate that has to work out on average for both of these products. Whereas with the multiple production department method, we have separate rates for each department, and we allow the allocation to be based on how those products are being used in the individual departments. It gives us a more precise or more accurate allocation than using a single plant-wide rate. The next option. So that's good, right? In that it hopefully gives us a better or more precise allocation. But what's even better is the activity-based costing method, ABC. ABC is an alternative approach. Again, we can continue to trace the materials, trace the labor, but now we can also use ABC to allocate the factory overhead. ABC assumes that we've got activities that consume the overhead. So the single rate, we take all the overhead and we use one rate. The departmental method, we take all the overhead and we split it into departments and we assign the overhead. In ABC costing, we take the overhead and we divide it into various activities. And then we find a rate for each activity. And then we assign the overhead based on those activity rates. So we could be assigning overhead using multiple rates, 6 rates, 7 rates, 12 rates, however many rates is appropriate for our operation. And in this example, so here we've got multiple department rates. We just completed this example with 2 rates, right? One for fabrication and one for assembly. That's what we did when we had departmental rates. Activity-based costing means we're going to take the same cost and spread it out over, in this case, 5 different activities, and we'll have 5 rates. So instead of assigning overhead twice, we'll assign overhead 5 times to each product. Again, should give us a more precise or a more accurate allocation. So now, under activity-based costing, we've taken that $1.6 million of overhead and we've divided it into 5 activities, 5 different activities, and we've assigned a cost to each activity, right? So that $1.6 million spread over those 5 activities gives us a cost, an activity cost for each activity. So we're saying fabrication, that activity costs $360. Assembly, that activity costs $240. Setup, that activity costs $480. Quality control, that activity costs $312. And finally, engineering changes, that activity costs 208. That's how we allocate the $1.6 million of total overhead costs to the 5 different activities. And then we want an activity rate. So we're going to do exactly what we did with a single plant-wide rate, exactly what we did with departmental rates. We're going to find a rate that's based on taking the cost, right? The budgeted activity cost for each activity divided by some activity base, some appropriate allocation base. So in this case, right, we've got the activity base for the activities and for the 2 products. So we've got the units of production, we've got setups, we've got quality control inspections, we've got change orders, we've got everything we need in order to be able to set up activity-based costing. So the activity, we're assuming here that for these 5 activities, fabrication here is going to use direct labor hours. How many hours? 8,000. Assembly is going to use 12,000 hours. Setup is going to use 120 setups. Quality control inspections is going to use 104 inspections. Engineering changes is going to use 16 engineering changes. So make a note here that what we're doing is we're determining the total activity for all the products, right? So the activity base, right? The denominator is not just 7,000 hours for snowmobiles. It's not 1,000 hours just for riding mowers. It's the total 8,000 hours it's going to be in the denominator. That's our activity base for this activity. This is the activity base for this activity. We need all the activity, right? So all the activity costs divided by all the activity base is how we're going to get our activity rates. So in the next table, we have that $1.6 million, right? This is the $1.6 million. And what we want to be able to do is take that $1.6 million, allocate it out to those 5 different activities, and find a rate for each one of those 5 activities, right? So that $360,000 that we've assigned to fabrication, we're going to use the 8,000 hours, right? So 360,000, that's the cost, the budgeted cost divided by the budgeted usage gives us an activity rate of $45 an hour. So when we assign overhead costs for that activity, fabrication, it's going to be at $45 an hour. Assembly, that activity costs $240,000, and we're going to use the 12,000 direct labor hours. That means that activity is going to have a cost of $20 per direct labor hour. Setup costs $480,000, and we're going to divide by 120 setups. That activity is going to cost $4,000 per setup. Quality control costs $312,000. We're going to divide that by 104,000 inspections. That's going to be $3,000 per inspection. Engineering changes, that's going to be 16 engineering changes divided into $208,000. That's going to cost $13,000 per engineering change order. So this again is comparable to using one rate, right? Estimated factory overhead divided by some activity base. Departmental rates, we had 2 departments. We came up with 2 rates. We've gone from 1 rate to 2 rates to, in this case, 5 different activity rates. That's how we're going to assign that overhead. And we assign the overhead in the same way we do when we have 1 rate or 2 rates, right? The overhead is based on the activity usage, right? Whatever that actual activity usage is times the rate, right? It doesn't matter whether it's 1 rate, 2 rates, or 5 rates. We're always going to assign overhead in the same way. It's the activity, the actual activity times that actual rate, right? So we get a rate in the same way and we use it in the same way, right? So you determine the rate and then you use that rate to assign the overhead. And then if we want to know what that factory overhead is on a per unit basis, get the total, right? Take the total overhead that you've assigned to the product divided by the total number of units. So that's what we're going to do here. Let's assign that overhead. So again, we've got these 5 different activities, right? So we've got our products listed at the top here, the snowmobile product and the riding mower product. Let's focus on the snowmobile product first. We have our activities, right? We got fabrication, we got assembly, we got setup, we got quality control inspections, and we got engineering changes. 5 different activities. We have 5 different rates, those rates that we just calculated. And then we have the actual usage for each product. for each activity, right? So the snowmobile product in the fabrication department used 7,000 hours. 7,000 hours times a rate of $45 gives us an activity cost that we've now allocated of $315,000. Assembly. The snowmobile product in the assembly activity used 3,000 direct labor hours, and that activity has a rate of $20 per hour. So we're going to assign $60,000 of overhead to the snowmobile product for that activity. Setup. The snowmobile product used 100 setups, and each setup has a cost of $4,000. We're going to assign $400,000 of overhead to that product. Quality control inspections, snowmobile product used 100 inspections, and it's got an activity cost of $3,000 per inspection. So we've got an activity cost of $300,000. Lastly, snowmobile product used 12 engineering changes at a cost of $13,000 a change. That's $156,000. That's the overhead that we've allocated to each of the 5 activities for the snowmobile product. Add all these together, and this is the total overhead that we've assigned to this product. This product has 1,000 units, $1,231,000 of overhead divided by 1,000 units. That's the overhead per unit, $1,231 per unit. That's the assignment of overhead. Again, we would trace the materials, the direct materials. We would trace the direct labor, but we would assign the overhead based on ABC. 1,231,000 total, 1,231 per unit. Same thing for the riding mower product, right? We've got 5 different activities, multiply the activity usage times the activity rate, and we've got an activity cost. Do that for the 5 activities, same thing. Total cost of the overhead for the riding mower divided by 1,000 units, $369. So if we put it all together now and consider, again, we've got 5 different activities, got to assign that overhead 5 different times, right? And at a rate, right, for each activity. Same rate for each activity, for each product. And ultimately, we end up with an overhead cost on a per unit basis. Again, it doesn't have any effect on the materials, direct materials, or the direct labor. We'll continue to trace the direct materials, continue to trace the direct labor. But when we assign that overhead, we've got options now. We could use a single rate, we could use the departmental rates, or we could use ABC rates. And in this chapter, we'll see all 3 of those. But the steps are the same, right? The way you find overhead is always going to be the cost, right, divided by the activity. You get that rate, and then you apply that overhead based on the actual activity times whatever that rate is. I'll see you in the next session, which will be the problem-solving session for chapter 18.